we have Daniel Salmon in the house, who is, we just actually, so Daniel Salmon hosted a very interesting event in New York in March called the Online Dating Investors Summit. And I think it was quite a precedent for both the dating industry and for analysts, because what Daniel, the fantastic idea that Daniel and Emily came up with and supported was bringing together some CEOs in the dating industry to talk to analysts. And so normally, they might bring Match together or Bumble or Match and Bumble, but we were able to invite hosts, a raft of top flight CEOs, along with a smattering of CEOs of dating companies, and along with the CEO of Match and the CEO of Grindr and a raft of their executive team. So it was quite an exciting event. Daniel, thank you very much for making that occasion. I'm looking forward to making that occasion again. You are the head of New Street Research. You're the head of their US internet team. Prior to that, you were 18 years at Capital Markets. And one of the industries that you cover is the internet dating industry. Thank you very much. And you've got a very tidy analysis of it, which you're going to give us a synopsis of today. So Thank you very much for your time. The floor is yours.
Thank you, Mark. Mostly want to thank you again for your partnership in pulling together the summit last month, and hello to everybody tuning in. I'll give you a little bit more background on me in a moment, and we'll also review some of the other key takeaways from the summit, although Mark's doing a great job recapping them on OPW as well. Obviously, my role in the industry is a little bit different than most everyone else here, as I'm a stock analyst. And so what I'm going to do is just walk you through some slides of basically an abridged version of some of the research that we've published recently. And before I forget, we're very happy to share the research with everybody here tuning in. So if you don't get it through Mark directly, feel free to email me at dan.salmon at newstreetresearch.com. It's all one word, dan.salmon at newstreetresearch.com. And I'm happy to share it with everybody who's tuned in here today, and get your feedback. What we do is try to learn from folks like you about how the industry works and where it's headed. But let me start with, like I said, I've got, about 20 slides that we'll go through, and then I'll pop back on here and make sure that I capture any of your questions. Okay. So there you go, a Wall Street analyst's view of the online dating industry. And I'll just add a little bit of background on myself to what Mark started with. So I've worked in stock research for 23 years at this stage. And as Mark mentioned, not just online dating, but I cover sort of the full breadth of the internet industry. And I used to cover traditional media as well, companies like Disney. What do? We develop as deep of an understanding of the relevant businesses in our sectors and the business models that drive them as much as we possibly can. We build big Excel models to try to forecast company revenues, expenses, profits, and then we value the stocks. And we ultimately usually have a price target and then a buy, neutral, or sell rating. All of that's bundled up in our written research, the highlights of some of which here on dating we'll get to in a moment. And then, naturally host events for investors like the Online Dating Investor Summit that Mark's already mentioned a couple of times, where we help ultimately my clients are institutional investors, mutual funds, pension funds, who are charged every day with trying to figure out how to drive the best returns for their fund holders. As mentioned, online dating, one of several subsectors that I focus on. We also cover digital advertising, so companies like Alphabet, Google, and Meta, Snap, as well as streaming. So I cover Netflix, and then e-commerce and vertical marketplaces, which of course is a big behemoth of e-commerce being Amazon, but online dating and is sort of one of those vertical marketplace industries that we focus on. And I currently formally cover Match. I've covered Bumble in the past. We helped both of those companies with their IPOs at my prior firm. And even though we don't formally cover them now, we try to stay as abreast of the full industry and stay in touch with them as much as possible. As Mark mentioned, I'll tell you a little bit about New Street a little bit in a moment, but I started my career at Citigroup, the very well-known American firm, and then it was 18 years at BMO Capital Markets, which is better known as the Bank of Montreal. I am also Canadian, so keep your A jokes to yourself. But the big change for me came over the last year or so, and particularly here in 2023, where I joined a much smaller boutique research firm called New Street Research, which is a partnership of analysts like myself, who we all focus exclusively on the tech, media, and telecom, or what we colloquially call the TMT sector. And all we do is research, whereas most equity research analysts are embedded at a big investment bank or a brokerage, where you've also got to help the investment bankers do their job and the trading operations run. This is all we do, and it was always my favorite part of the job, and so I'm really happy to be exclusively focused on it. And New Street is a 20-year-old firm originally founded in London, but today with analysts based around the world, including offices here in New York and in Singapore. So just a little bit, like I said, I am not an online dating founder or CEO. I'm a little bit of a different role that I play in the industry. So let's spend a little bit more time giving you the background. And I'm going to get to more of the industry data in a moment, but I'm going to front load everything with the sort of stock and valuation and metrics. So this is the type of thing that we present to our investors to summarize what our basic views are. And we're very positive on the industry right now. Match is our top pick among small cap stocks, but that comes against a backdrop where I would say investor sentiment is, and I should be clear when I say this, that the investor sentiment is very negative about the public stocks right now, and Match and Bumble, and you can all just go to Yahoo Finance and take a look that they, like a lot of other internet stocks, are taking a pounding again today. And I would say that the public investors' sentiment towards dating right now is probably more negative than it's been ever since Match came public. And there was a big question at that time about whether Tinder's basic business model would kind of destroy the economics of the industry. Of course, that was fairly foolish, and it's flourished since then. Today, as we'll get to a little bit more, it's more about oversaturation and whether the sector is maturing ultimately. But before we get to some of those points, just here is the summary of most of the major public dating companies. Of course, hundreds, if not thousands, in the private market that most of you are operating today. And just again, so quick summary of where companies' revenue growths and EBITDA, or earnings, a form of profitability is a measurement of what EBITDA is, as well as the valuation. And I'll take a moment just to show this chart. Maybe familiar with the basic idea of a price to earnings ratio as the basic measurement of the value of the stock. If the price is $100 and the company generates earnings per share of $10, then the PE ratio would be 10 times as well. This is a measurement here showing historical valuation, not on a PE basis, but again on a slightly different profitability metric called earnings before taxes, depreciation, and amortization. And what really should stick out to all of you. Don't need to be a stock analyst to see that enthusiasm for the group grew significantly over the last 7 to 8 years as Match came public, and then Bumble more recently. And then it has had a significant pullback since then. And today, you're seeing the public stocks in Match and Bumble go from trading at around 40 times enterprise value to EBITDA at the sort of peak of the pandemic, and when Bumble first came public, to now down closer to 10 times. So, and again, it's about concerns about saturation in the market, competition, and notwithstanding what we've heard about such a rich and robust ecosystem that's out there, we do still think that this is ultimately an industry with growth, and that even the larger players, as we heard from Joel, do have some advantages still, including being potential acquirers of your businesses. So, but that's just a little bit of backdrop about the sort of stock part of what I do and the valuation. Of course, I'm happy to follow up and answer some more specific questions on that. But just quickly, before we dig into some of the research that we published, as Mark mentioned, we co-hosted with Mark just a fantastic event in New York last month, where we had not only Bernard Kim, the new CEO of Match, and their president and CFO Gary Swidler joined, but the team from Tinder, their chief operating officer and chief product officer joined. Mark mentioned a couple of highlights that they've mentioned. Tinder did confirm that they were testing a $500 a month super premium tier while we were there, amongst some of the other highlights. I won't tick through them all here, but some of the big themes were focused on Tinder turning around their growth, which has slowed down considerably, especially in the number of payers that they're seeing, where they saw a decline last quarter and expect to see it decline again this quarter. More broadly for Match, growing in Asia is a big priority for them. As I'm sure most of you know, they acquired Hyperconnect a couple of years ago, and even they admitted that acquisition has not gone as well as they'd hoped. And we didn't mention it here in the recap, but we obviously spoke about Hinge as well, and which continues to be a really big, fast grower for them. And they reminded us that they partnered together since Hinge was just in its very early days in 2017. So a mix of things that are going on at Match these days, with Tinder trying to turn around and growing in Asia again, becoming really important. And then yes, we had the new management team of Grindr, been handed off a couple times from Joel at this stage, and they joined us to talk a little bit more about how they're trying to move beyond simply being known as a hookup app to facilitating friendship network. It highlighted how important travel experiences are to their users, and George Arison, their new CEO, is also particularly optimistic about where artificial intelligence can impact and be a positive force in the industry. So, again, happy to share. We have a longer report that I hope Mark's highlighted a little bit on OPW, but we're happy to share all of that, as well as much more about what I'm about to dig in here. This is, like I said, highlights of a longer report that we published the week before the summit. And what sits behind this really is a great big Excel spreadsheet that we built once upon a time to try to create an industry model for online dating, where we really try to estimate industry-wide revenues, number of users, number of payers, and we'll dive into some of the highlights of the numbers in a moment. But to set the stage, and for this group, a lot of this will be pretty natural to you for our investors who are trying to educate on some of the big trends in the industry, where maybe a little bit more new for them, but sort of three big trends that we highlighted here at the Open is, and Joel hinted at some of this, is the importance of a growing importance for Generation Z in terms of authenticity, better, women's experience, which obviously Whitney's championed at Bumble, and really, trying to move a little bit away from the sort of more, at least superficial seeming experiences that maybe a pure swipe right and swipe left, more casual dating type of experience encompasses. So, and that includes at Tinder, where they certainly have championed a lot of the activity on the casual dating side, but are really trying to push further into becoming more of a true relationship app. It's on the left here. I think this is a really important product that they rolled out in late December, where they're highlighting to users now to choose what are you looking for, right? A long-term relationship, short-term relationship, etc. So we all know what they're doing behind the scenes there. That's helping segment their audiences and trying to match up users looking for longer-term relationships more than those who may be casual or otherwise. So again, trying to address where especially Generation Z and female users are looking to see more from dating apps out there. Second, we've heard about it a couple times, and this is a bigger part of our work across all of our internet companies, but that's about the introduction of artificial intelligence, or not introduction, but bringing more artificial intelligence into these apps. And of course, like I said, I cover Google, and they're really deep into this with things like ChatGPT and generative AI and developing in their search results. So of course, this is an underlying theme to all internet businesses today. And just here on the slide, just a couple of quotes from some of the prominent executives on what they've said on earnings calls or investor conferences of late. But let's say the two key areas that we've heard a lot about for AI innovation is certainly to help basic matching and seeing which profiles are more likely to be conducive together. The one that I learned quite frankly about from talking to Joel and other founders at our summit was creating a sort of coaching elements to help prompt conversations and messaging on the app, which leads me maybe down the world of one day we may not know how often we're maybe talking with a bot versus a person, but those are maybe questions for another day. But clearly AI being integrated into the products much more significantly in driving product improvement. And then a boring but important topic, especially when we're talking about distribution and the cost to do so, is the potential for Apple and Google to loosen up their in-app payments policies for the app stores. Companies like Netflix and Spotify have sort of led some of this more quietly over the past decade to note that the companies are essentially clipping up to 30% of their revenue from any transactions that you're making on the apps if they've been distributed and using their payment system. Match is currently in the middle of a lawsuit against Google, working with video game companies like Epic to help try to break down this duopoly and sort of rigid payment terms that are quite significant. As Match noted at our conference, is just on the left here is a graphic showing their total in-app payments, which are over $600 million at this stage, and we forecast them reaching nearly $1 billion without any change by the end of the decade, and that, as they said, is bigger than their own R&D budget. And so the thing that we're watching really closely here is even though a number of countries, the Netherlands and South Korea in particular, have passed some laws to force Google and Apple to feature more payment options, probably the thing we're watching the most closely is the introduction of the Digital Markets Act in Europe, which is laying down a series of rules for large technology companies, large gatekeeper businesses, and as has been well reported, we think that Apple and others would be looking to have more flexibility in-app payments, for example, allowing other app stores to be on iOS. So hopefully an opportunity for all of you to seek out some new distribution opportunities as that goes into effect. So again, some of the things that are important drivers of innovation, again, most of you probably know much more about the details of it than me, but these are the things that investors are interested in up at my level and where we try to shed light. Just to bang through this a little bit more, so I mentioned at the outset, we built several years ago now and updated it last month a large Excel spreadsheet. We've got it built out by region: North America, Asia, Europe, and other areas where we are mapping out. We start with the total population down through to who's single and ultimately using dating apps, right up and through to percentage we believe are paying for them, and then apply an estimate for revenue per payer to try to generate revenue. And I'll walk through that a little bit more here. What we're showing here in this chart is you can see sort of the burst of online dating activity that took place through the pandemic, when in many places you had no choice but to be online and dating, and the use of, we saw the spike of video dating during that period when it was kind of forced upon people. We are going through a period right now where the major apps like Tinder are seeing a bit of a slowdown in usership as normal life resumes. And that's on even a bit of a delayed basis, even in markets like Asia that are only just starting to reopen. Here, this chart is marking payer growth. So not just online dating users, but payers as well. And we think the inflection was a little bit less pronounced through the pandemic as the more, I guess, if you call paying users more hardcore users were more inclined to continue paying. And even those who didn't pay previously obviously had more reason to do so when you couldn't get out and date in real life. As I mentioned, we do break down the model by region. And here we show some of the changes that we updated it. We did lower our estimates for the total amount of payers globally. That was most acutely felt in North America and Europe, whereas Asia remains a region where we think that there's a fair amount of growth to go still. And then just for the biggest incumbent, Match, to just bring them in focus here a little bit, and what some of our data shows is this is just showing payer penetration relative to their user market. Tinder, very high teens, low 20% likely, but has been stagnant of late. And as we said, they saw a decline in payers this last quarter. Hinge, I think, is well known, is continuing to grow fairly rapidly, including their payer base, not just the user base. Asia, obviously a regional look, although if you've looked at how Match reports their quarterly earnings, this was a new change for them, where they have organized all of their Asian apps into a single segment. That's mostly the Hyperconnect apps, as well as pairs. That's an area where we think they have opportunity to grow. And then lastly, what they call their evergreen and emerging segment, which is anchored by a lot of those legacy apps like Match and Meetic and others, where the usage is declining, including the payer rates. That's a little bit on users, just to walk through things that I think most of you all know very, very well, which is, how does the business monetize itself? Subscriptions are the basic, the original model. speaking to a lot of you at our summit and otherwise, we've obviously mentioned Tinder's move into a higher product, higher priced subscription that they are testing currently. Hinge has launched Hinge X, which is already off and running. It does seem like the the slower payer growth is leading more apps to test higher prices to drive revenue growth. That again is one of the things that investors may be sour on a little bit. They'd like to see the whole market growing rather than pushing revenue just because of price increases. But nevertheless, it's something that a lot of people will pay a great deal for. So subscriptions have always anchored the business model. Then a la carte, or sort of ad hoc sales of individual products, boosts, being a very common one that was popularized on Tinder amongst others. Again, these are the two basic business models that I think most public company investors are familiar with on dating. Of course, lots of things that are been tested and maybe starting to get a little bit more traction in some areas, including virtual goods and currencies, where Tinder has promised where they're going to bring a Tinder coin to market at some point. But Zoosk and Coffee Meets Bagel are two apps that have been in this area for some time already, as well as Hinge with their roses. Interested to see where this can go. It brings a little bit more from the gaming space as well, but interested to see how big this business can get. Video chat and live streaming. Again, Joel's comments earlier about difficult to maybe perhaps have it be a native and your whole service built around it, but certainly seeing a lot more features or a lot more apps featuring different elements of bringing video, and again, something that was quite a bit more popular during the pandemic. And then lastly is thinking about more than just dating, and whether that's broader social discovery, networking, finding friends. Continue to see more apps, especially including Bumble with their BFF product test in this area. Love to hear from all of you whether you think these are successful opportunities or not, because at this stage they're not doing a whole lot to drive the businesses here, but largely still, I don't know if I want to call them experimental, but certainly non-monetized at this stage. Just the last part, because I know we're running long here, and I want to get to your questions. Mentioned the users and the payer rates that we forecast in our model by region. We also make estimates ultimately for the revenue per payer and total revenue itself. And here you can see just a quick summary of our estimates by region. And yes, after this lag through the sort of early last year or so, as there's been a bit of a hangover for the industry post-COVID, we do see some growth returning in a significant way, especially driven by Asia. Here again, just to bring Match into focus, and to just where some of their revenue per payer sits relative to some benchmarks. Tinder actually a little bit lower than the global average. Hinge quite a bit higher. I don't think that's a huge surprise in terms of who the typical user is on them. And then in Asia, again, this is a big opportunity, we think. And of course, to be clear, Tinder and Hinge, of course, operate in Asia as well. But the specific apps that Match owns in that region, still, outperforming there well. Part of that has to do with some of their live streaming apps that are there and charge higher price points than just simply for dating. But quick little snapshot of where the big incumbent fits into the space. And then lastly here is just a quick look at sort of market penetration for Match across both their individual segments in terms of their penetration across the entire global addressable market that we forecast, and then and then looking at it a little bit more on a regional view here as well. And you can see, certainly in North America, Match's market share is fairly significant, well over 50% in our view. And so again, back to this sort of common theme about really looking to Asia more for growth, as well as Gen Z, who they're trying to bring onto the platform more. Just lastly, before I finish up, all of these forecasts that we do are all for paying elements of online dating apps. Of course, advertising's been part of the business for a long time as well. Maybe a little bit less of a focus than it is for some other mobile app categories, but Match's new CEO, Bernard Kim, is certainly trying to reinvigorate the advertising opportunity there, and something that they're looking to roll out and as they say, monetize some of their non-paying users more. So I probably went a little longer than I'd hoped because I want to get to your questions, but hopefully that's a very quick run through the sort of world that I look at and some of the things that I try to present to investors, which I'm sure seem fairly simple and straightforward to all of you, but not so much to the group that's trying to learn and decide where to invest their money next. So, but I will pause there and Mark, if you've got questions from the group, I'd be obviously happy to field them for what time we have remaining.
Great. Thank you very much, Daniel Salmon. I really appreciate your time. We do have a couple of questions. So that was a great presentation overview, and the analysis I can definitely vouch for, being an absolute smorgasbord of intel, and especially the trending. That's super useful for us to see some of the trending. So Brad Jones asks, from Make Kingsters asks, what's your take on M&A on the growth? What's your take on M&A on the growth of the A-tier players you cover?
So, let's start with Match, who's obviously been fairly significant acquirer over the years in the sector. They're certainly out there looking and continue to look at the best opportunities. I'm sure many of you have heard from them at times with their inquiries. Where the balance of where they're looking to use the free cash flow that they generate, with their stock being so much cheaper on a valuation basis than it was before, they're using a little bit more to make share repurchases today and buy back their own stock. That's the acquisition that they're preferring, is remove some of the shares of Match in the first place. But they're always out there looking for opportunities and where it makes sense. To be frank, I think they know that many in this community are often building to try to sell, and they're interested, I think, a little bit more in where there's really differentiated product and communities that they couldn't reproduce themselves. That has been something they've leaned a little bit more towards in recent years, is to try to create their own apps and simply be a copycat. But there's no doubt that M&A is going to remain important to them for some time. The other thing I'll just add here, since we're on to the idea of just what Match does with its free cash flow it generates, because a lot of folks at the summit asked us about Match's debt levels. And they are relatively high for an internet company. They're not so high that we think it would preclude them from doing minor M&A, perhaps major M&A right now on the scale of doing something like Hyperconnect again. But just so everyone knows, that the sort of the history of why Match has that amount of debt on their balance sheet, it came about as part of their formal spin out from Interactive Corp, IAC, which was their original parent company, which that final spin out only was completed, I guess, about 2 years ago. And long story short, that debt actually sat at IAC at the time, but once Match was spun out and took the majority of IAC's profits and cash flow with it, they sent the debt with it as well. And so they have a ratio of a little over 3 times of their debt balance versus their total profits. That is a little higher than most companies in the internet space, certainly, but versus when they were first spun out, that ratio is closer to 4.5 times. So they've actually brought it down and made it a little less risky from an investor's perspective over the last few years. On Bumble, so you know, I remember very clearly when we helped them at my old firm do the IPO, and you know, I mean, Whitney was certainly championing the female first approach of Bumble, but also I would say noticeably pushing back on the idea of building a portfolio like Match over time. I think that's evolving a little bit. You know, obviously they've added Fruitz. Well, first of all, they came together with Badoo and formed a larger company originally, but they've launched a third app now in Fruitz. They also have a fairly significant private equity owner now in the Blackstone Group that probably has a greater appreciation for mitigating risk through a portfolio strategy. So my bet is that they are probably a little bit more inclined to M&A these days to build out a bit more of a portfolio. But you know, it's still really important to them to sort of champion the Bumble brand and its differentiation first and foremost.
Great, thank you, Daniel. And Hannah Shimko from ODA asked, do you see any threat to value of the public companies from changes to subscription requirements from the government? Would these also scare investors? What do you think the palette is?
So there's a few things that could be in there. You know, so there, and I think there's some elements here about the government's mandating. Mandating the need to make canceling subscriptions easier, more consumer-friendly policies that you don't have to search through 9 different menus to find where you cancel a subscription. That's as relevant for Netflix as it is for dating. And then, you know, obviously, you know, privacy regulation, you know, is relevant in this space as well, even though we maybe focus on it a little bit more in broader social media. But I don't think there's any, you know, restrictions on subscription requirements that we're seeing right now that would be the type that are scaring investors. But you know, Hannah, please email me if there's something I'm missing out there that we may be changing, because there's maybe a few different things there. Quite frankly, the issue that most investors are thinking about with subscriptions or payer rates right now is again this issue with the app stores obviously taking their cut when you're distributed, you know, through the app store and using their payment system. I think what investors are most focused on is the opportunity to avoid that if legislation like the Digital Markets Act forces Google and Apple to offer other ways to access as well as other payment tools. That's the topic that's probably most relevant in that general area. But please email me if there's something I'm missing. That's what we're here to learn.